The SoftBank-backed chip designer ARM set to price shares after the close. It's expected to be a blockbuster IPO. But it's been a few years since we've had one of those. So our Deirdre Bosa is here taking a look at some warnings for the retail investor looking to jump in. Deirdre, what are you looking at?
Yeah, so Sarah, blockbuster IPOs, these are names that are already widely known companies or widely known brands, but people haven't been able to own a piece of them until that IPO day. So Instacart, it was launched more than a decade ago, and it brought grocery shopping online. It's now a household name. ARM is in 99% of all smartphones, so it is not surprising that the ordinary investor might be eager to buy in the first chance that they get on IPO day. But if history is any guide, retail investors should beware the blockbuster IPO. Take a look. What you're looking at right now, 7 of the biggest listings of the last 4 years. Every single one of them are lower than that first day peak known as the IPO pop. And only 2 of them, Airbnb and Snowflake, are up on their IPO price, which bankers set before they start trading. Now, there's a few reasons for this. One, tech startups, they are staying private for longer. Over the last decade, as interest rates approached zero, venture capital and private equity, they were essentially throwing money at startups at higher valuations, and in many cases, that pushed out profitability. By the time that they finally hit public markets, their best growth days may have already been behind them, and retail investors were simply getting the scraps. 2, some of these companies, some of the biggest blockbuster IPOs may have IPO'd at peak hype. Rivian was not only wrapped up in the excitement over electric vehicles, but it had 2 established companies, Ford and Amazon, buying in and drumming up even more excitement among retail investors. Now, those 2 scenarios, they did play out against a very different economic backdrop, but they may have lessons for the pair of blockbuster IPOs that we are waiting on. ARM is hoping to cash in on the latest hype cycle, generative AI. It's also lined up some of the biggest names in tech, NVIDIA, Intel, Apple among them, as potential cornerstone investors. Now, it has targeted a $52 billion valuation, and that gives it a very large premium to chip makers, other chip makers in similar positions, even as its own revenue growth is slowing. Instacart, though, guys, this could be more interesting. It is already profitable, and it is going public at just a quarter of its peak valuation, which implies that the company and its bankers are taking into account that slower growth and public valuation compression, and we haven't seen one of these in a very, very long time. You think about the other gig economy companies, and they went public at or near those peak valuations in the private market.
Yeah, on Cart, Dee, I think the big concern is flat orders in the first half, right?
Absolutely. But what I'm saying is its valuation kind of accounts for that. This is no longer a $39 billion company that's going, public at that high valuation. It's less than $10 billion. Its EV multiple is less than that of DoorDash and Uber. So it kind of tells you that maybe valuations have become a little more reasonable in this case. ARM, though, a very different scenario. I mean, SoftBank and Masa saying they're trying to get as much as possible, which absolutely makes sense, but it really has to sell that AI story, and those cornerstone investors could help.
Yeah, we're going to learn a lot more about that in the next 48 hours. Dee,